Broadcasting live from the Business RadioX studios in Atlanta, Georgia, it's time for Atlanta Business Radio. Brought to you by OnPay, Atlanta's new standard in payroll. Now, here's your host.
Lee Cantor here, another episode of Atlanta Business Radio, and this is going to be a good one. But before we get started, it's important to recognize our sponsor, OnPay. Without them, we couldn't be sharing these important stories. Today on Atlanta Business Radio, we have Hunter Ewing with High Ground Company. Welcome, Hunter.
Thank you, Lee. It's great to be here.
Well, it's great reconnecting with you. For the folks who don't know, can you tell us a little bit about High Ground? How are you serving folks?
Well, thanks, Lee. We are an insurance advisory firm, Lee. We have a particular niche in using life insurance products to help folks, in many cases, with tax planning, with business planning, sometimes philanthropic planning. So these are more sort of tactical, strategic uses of life insurance planning, many times driven off of those things as well as just the tax benefits of life insurance. So we look a lot like a consulting firm, I guess is what I would say.
So can you share some, maybe some misconceptions about life insurance that folks aren't aware of?
Well, I appreciate the question. That's a great question. I think one of the biggest misconceptions about life insurance is that it is a cost. And let me differentiate that. I think of life insurance as an asset. And the reason I think of it that way is because, like anything that you put money into and you know something is going to come out of it in the future, you can sort of say, all right, what's the investment return or the internal rate of return on doing that? And that looks a lot like an asset. So if I put money into a real estate, whatever, something's going to happen in the future where there's going to be a return, and that's an asset. So I think a big misconception is just that it's a cost or an expense when I think of it more as an asset.
Is it because by having the word insurance as part of the name that people look at it that way, that this is, in case everything goes bad, something will be there. Hopefully they don't kind of look at it as an investment.
Yeah, I think that's absolutely right, Lee. I think also, in all candor, our industry has not done itself any favors in some ways, in the sense that, many people have purchased life insurance products that have not been adequately serviced over time, and they haven't provided the outcome that was originally intended. That's an issue. I think also, candidly, just kind of the nature of the beast, it's difficult sometimes for folks to discuss and think about their own mortality. That can be an issue. But, I think one thing I would just say is if you sort of strip away the word and the name life insurance and you sort of look at it on an economic basis, you look at it and go, man, that's a very efficient financial product, and the right set of circumstances can really be helpful for whatever someone is trying to accomplish. Doesn't fit every need, but it certainly can be very useful in the right situation.
But if you're planning, if you're working with a financial advisor or a wealth consultant, it should be part of the conversation, right? This isn't something that you just immediately just take off the table.
I would think so. And candidly, that's really a lot of our business is referred to us from other financial advisors, many of them in the wealth management, asset management world. Lots of our business comes from attorneys that specialize in tax planning, CPAs. But yeah, absolutely. We see some of the wealth management firms really appreciate the role of life insurance in a client's overall financial planning.
Now, can you share like a hypothetical example of where this is like a no-brainer that people should be at least considering it? Like, what is a scenario where this would be kind of a kind of no-brainer move?
That is a great question. I'll try to keep it short and sweet. I think two things come to mind. Lee, if you and I own a business together, and it's a very valuable business, and something happens to me, my ownership in the business is going to go to Lisa, my wife. You got to have the means, the cash, to be able to buy Lisa's interest out after I'm gone. So in this example, what a life insurance policy will do for each of us is it would give you the cash tax-free that you would then use to buy light leases interest in the business. And so from a business succession, what's called buy-sell planning, I think life insurance is a no-brainer. The other thing that comes to mind is if I'm a very, very high net worth family or individual, and am subject to a potential estate tax in the future on transitioning my wealth to the next generation in my family, I can purchase a life insurance policy. And essentially what I'm doing in that case, Lee, is I'm buying cash in the future at a big discount. So just to pick a number, if I face a $10 million tax bill in the future, or my family does, I can buy $10 million of tax-free capital by way of a life insurance policy for a lot less than $10 million. And so to me, that's a no-brainer.
So now you're talking about high net worth folks. Is this something that, like, what's a number that of net worth that you should, consider at least having conversations about this? If somebody has $100,000 as net worth, is this something worth having a conversation on, or is it, like you said, it's got to be 10 million and above?
Well, there are certainly, let me answer the question this way. There are certainly great uses of life insurance regardless of what someone's wealth is. It happens that our business is more focused on the high net worth market space. But, for example, I don't consider myself mega high net worth at all. And my wife and I are using life insurance as a way to create some capital for our 3 kids and grandkids at some point in time by way of kind of a legacy creation strategy. So when we go, there's a certain amount of money that's going to go into a trust and sort of create some inheritance for our children and grandchildren someday. So, I think the rules apply. Again, I would say, to simplify it, if someone says, I want to create some capital when I go for some reason, I want to create some cash tax-free when I go, for whatever the reason is, I think insurance at least should be considered and taken a close look at.
So now you mentioned that a lot of your work is done through referrals from people, I guess, who aren't specialized in this niche as you are. How do you kind of bubble up those opportunities for these folks? Is it just a hole in their offering that they don't do this and they're looking for an expert? Or is it something that you've established yourself as kind of a thought leader in this space?
I wish I could call myself a thought leader. But the answer is that it takes a lot of time to develop trusted relationships with other advisors. There are lots that goes into that, Lee. Personal chemistry, trust, confidence. But we've spent a lot of time over the years developing relationships that are trusted. These folks that and it goes the other direction too. If we have a client, for example, who maybe says, gosh, I would really like to have a new accounting advisor, a CPA that could be, provide X, Y, or Z. We have a great network of folks that we could refer based upon whatever they're trying to accomplish. And it goes the same way. So we have spent a lot of time over the years developing relationships. We spend a lot of time regularly keeping our close relationships educated on opportunities for insurance planning so that when they're working with a client, and the client says something that may trigger a thought where the advisor might say, maybe that's something we need to consider. Let's call high ground and at least do some analysis and figure out if it's a good fit. Is there a problem that you have that the client has that maybe insurance can help solve? So that's our approach.
Now, you mentioned one of the uses of insurance or life insurance is through this kind of succession planning for businesses. Mm-hmm. Is this something that, you mentioned early that individuals don't like to talk about their own mortality, but in business people, it's probably even worse because they have their own mortality plus the mortality of their organization. So is that kind of even more difficult to even open these conversations with business owners?
Yeah, I think I don't know if it's more difficult, but it's equally difficult. Look, my partner, Bo Wilkins, and I owned high ground company, we're, just like all business owners, busy every day with, running and growing your business. And sometimes it's just hard to sort of pull back and say, whoa, I need to take some time to really sort of think about this particular issue. And you sort of look at it and go, well, maybe it's not, going to create revenue today. It's a longer term sort of thought process. And I think that's the thing that makes it difficult, Lee. It's just the fact that business owners are busy people. They got a lot of things that are happening every day, fires that pop up. And so, allocating the time and energy and to think about these kind of things it's just not easy.
So what would it look like if you have, like you and your partner, what does that conversation look like, and how do you begin to even calculate what is the appropriate policy that the partner should have?
Well, that's a great question. Let's think about it this way. If in a situation where perhaps maybe an attorney has introduced us to his or her client, and they've already discussed the importance of sort of business succession planning, then the issue is already on the table, and the prospective client, the business owner, is sort of a mindset that they want to sort of focus on it and discuss it. In a situation like that, Lee, we would have a meeting with the client and those advisors to really, so that we could understand firsthand what their concerns are and what they were trying to accomplish. On the other hand, if it's sort of a more traditional sort of organic situation where maybe we just meet someone and that previous conversation has not happened, we would take the approach again of from really the ground up to learn about them, learn about their family, learn about their business, learn about what's important to them, what are their concerns, and go about it in a more traditional manner. Did that answer your question?
Well, I'm trying to look at it through the lens of a listener that has a business and they have a partner, and maybe they're getting older. That it's like you said, they were busy. This didn't even occur to them, that the tax ramifications and the logistics of, okay, what am I going to do? One of us, is not here anymore. Now I got to deal with their spouse. It's all these unintended consequences that occur, once
right.
That domino falls. So say they wrangle their partner and they say, okay, Hunter, what do we do? Like, do I get an appraisal for the company so I know the value? Like, how am I going to logistically, get this policy so that I can take this, worry off my plate?
Yeah, that's a great question. So I think that's right. I mean, we would certainly, in that kind of case, we need to assign an accurate value for it. So we work with accounting firms and valuation firms that would do that very thing. I will tell you that at least sometimes we're involved in a project right now, and these two fellows own a very successful business. And as simple as it sounds, we said to them, look, hey, Bob, what is the minimum, if you were going to sell to Jeff today, what is the minimum value you would take for that? And they sort of sat back and, sort of looked at each other and laughed and made a couple jokes. But they finally came back and said, you know what, in all seriousness, if I were out of here, if I were just going to sell it and retire today, I would take no less than blank. And so we talked about that more and really sort of drilled down on that. But at the end of the day, that's the amount of protection that we're working off of.
So it doesn't really, a third party appraiser, that's nice to have, but the bottom line is this is a negotiation between two partners, right?
Yeah.
So the value is in the eye of the beholder from that standpoint.
Yeah, that's right. I think that's exactly right. No doubt about it. Yeah. And the other thing I would add to that is, we certainly see situations. We have clients that will insure some of the risk that they have. In some cases, not all of it. We certainly have clients that will insure all of that value. But in some situations, they also have other strategies that they incorporate with insurance, such as an installment type arrangement. Maybe, Lee, you and I, again, own a business and it's worth a lot of money. We might fund 50% of that potential buyout cost with insurance. And then we might say, okay, the rest is sort of paid out over time. Or a lot of times we'll get a question about, okay, well, my business is worth X today, but certainly we hope it's going to be worth more in the future. What insurance value should we work off of? And we can certainly say, all right, let's ensure the value today. We could even buy forward a little bit and increase the value based upon anticipated growth. But in a lot of cases, Lee, they might say, all right, the value is X today, and anything over that amount, we're going to, handle by way of some kind of installment payout or loan arrangement, something like that. So, it's all the above.
Now, if somebody, like they say, okay, our business is worth $1 million, and I want to get $1 million of life insurance in case, when one of us goes, what is how much is $1 million worth of life insurance? Or is there a flat amount of money, or does that thing depend on several variables?
Okay, another great question. So it will depend upon the person's age and their health and the type of product that they purchase. So there are different types of insurance products. Oftentimes people will use term life insurance, which is a great product for a short-term need. Sometimes they'll use a permanent life insurance product for kind of an indefinite need. So one of the really important things we try to understand is, where are they on that? Do they intend to maybe sell the business in the short term or in the future? In that case, we probably would recommend they buy term life insurance. On the other hand, like the fellows that I mentioned earlier, they're saying, we're going to be here for the long haul, and we want this protection to never go away. Well, in that case, we're recommending permanent insurance. So all the things that you're asking will be driven off of their age, their health, and the amount of insurance, and obviously the type of insurance.
So what would be kind of a range for $1 million, like for term and for permanent?
I would say for term insurance, my sense would be, call it $1,000 or $1,500 for every million, assuming someone is, I'm 58 years old. $1 million of term insurance for someone in good health is probably $1,500 for every $1 million, and that would last about 20 years. Obviously, it's kind of a good estimate. If it's a permanent insurance policy, the outlay might be 7 to 8 times that amount, but it'll never go away. So that's kind of the distinction. You're buying a longer period of coverage, and that just takes a higher amortized outlay.
And that's an annual fee. You're paying that every year to maintain the insurance?
That's right. And then they can be really, really customized. So today's products are so much better than they used to be, and they allow us to design the policy so that, again, I'm going to pick on you and me. We might say, look, boy, we're really doing well right now, and we expect our business to be really, really strong for the next 5 years. We want to knock this thing out and fund it over the next 5 years, and we don't want to have to pay for it after that. We could sort of design the contributions to the policy to really to pay it off or pay it up in 5 years, and so they're very, very customizable this day and time.
And that's why you kind of need an expert, right? This isn't something, if you were trying to Google this and try to figure it out on your own, you're going to miss some stuff. You got to work with folks that are doing this every day.
Thank you. Yeah, I agree with that. It sounds self-serving, but there's a lot to it. And it makes me think about, here's an analogy. You can buy a will or a trust or some sort of legal document off LegalZoom, but you sort of get what you pay for. And you really ought to have a good attorney. I know sometimes it's expensive, but those folks are invaluable. And a good accountant, they are invaluable. And a good wealth management person, instead of trying to do it yourself, they're going to be invaluable. So, we think of ourselves, I guess, in that same vein.
Right. It's one of those things, you don't know what you don't know. And these people are kind of going over this every day. They're paying attention to the trends and the little nuances of this stuff that you might miss because you have a real job. You have another job that's not this, and that this is their job.
Yeah. And the one thing that comes to mind as you said that is it's so important to have a good team. And I think that's one of the things that we enjoy about our work is we get to work with other advisors and really put our heads together with them and, figure out the right approach for the client together, get the attorney's perspective, get the accountant's perspective, get everybody's thoughts on the table. 99 times out of 100, that creates the best outcome.
Now, is this an industry that changes a lot? Are there new things coming, new offerings coming like every day, and you got to be on top of this? Or is it something that, this thing is what it's been?
Yeah, man, you've got some great questions today. It changes all the time. And there are a handful of things that change. The products change a lot. One of the things that was really helpful, I think, about COVID was the fact that it really forced insurance companies, for probably a good reason, have gotten a bad rap on their technology and on their implementation systems and what have you. And man, COVID really, really forced them to get in the game from a technology standpoint. And so good example would be, when someone buys insurance, historically, they have to have an examiner come see them and get a blood sample and urine sample and this stuff to prove they're in good health. Today's world, that still happens in some cases, but more and more frequently now, AI technology is coming into play where some of that underwriting can be done without those kind of things. So, and we know the companies that do that, and we know the companies that are easy to work with, and that changes all the time. Products change. It's a very, very competitive market. Insurance companies are always trying to outdevelop each other on the product development side. They're constantly coming out with new products or tweaks to existing products. And a big part of our job is to stay on top of all that stuff and know what's happening in the market so we can bring the best potential solution to our clients.
Well, if somebody wants to learn more, have a more substantive conversation with you or somebody on the team, what's the website? What's the best way to get a hold of you?
It is www.highgroundcompany.com, www.highgroundcompany.com. And we are here in Atlanta, right over by Powers Ferry and 285. But our business is all over the country. And we would be happy to help. Take a phone call or arrange an appointment to learn more. See if we could help.
Well, Hunter, thank you so much for sharing your story today. You're doing such important work, and we appreciate you.
Thank you, Lee. It's been fun. I've really enjoyed it.
All right, this is Lee Cantor. We'll see you next time on Atlanta Business Radio.